Hello traders, in this lesson we are going to talk about leading indicators. I said that the most used leading indicators are actually oscillators. They oscillate in a certain range and provide us with assumption about the future price movement. These indicators are very popular and they are used in all financial markets. The two most important oscillators are the relative strength index and the stochastic oscillator. Now let's say something about relative strength index. I'll add it to the platform and explain how it is used in trading. First, click on the list indicator in the upper menu and then select relative strength index. In the oscillators group, we have a new window where we can adjust the parameters of the indicator. Period 14 means that the indicator takes 14 periods, or the last 14 candlesticks, into the calculation. The color and lines of the indicator are not that important in the level tab. We see levels meaningful to traders. When it comes to the RSI indicator, those are level 30 and level 70. Okay, you generally don't have to touch anything. Just click on the OK box. When I press the OK button, the graph has split into two parts. In the upper part, there is a price movement line, and in the second part, there is a indicator movement line. Levels 0, 30, 70, and 100 are visible on the side here. This tells us that the range between this indicator oscillate is 0 and 100. So those are the minimum and maximum values of this indicator. However, the most significant levels for us are level 30 and level 70. The zone between 0 and 30 is oversold zone and provides us with B signals. So when the indicator drops to this zone below level 30, then we have a buy signal. A value between 70 and 100 is called the overbought zone and tells us that market demand is too high. And there may be a turnover when the indicator is in this zone. We have a sell signal. The RC indicator is probably the most used indicator on Forex, and it is the only indicator I use in trading. Of course, I have to say that you should never use RSI, as well as any other indicator, as the only tool in trading, but only as an addition to your strategy. Okay, let's repeat. So we have three zones, and the first is oversold, and it gives us buy signals when the indicator from that zone enters the neutral zone. The second is the overbought zone. It gives us sell signals when the indicator from this zone enters the neutral zone. The third zone is called the neutral zone. Traders generally do not pay as much attention to this zone. As overbought and oversold zones, I will turn off the RC indicator and add the next one, which is also very popular. It is very similar to the LSI indicator, and that is the stochastic oscillator. New window opens again. Here we can see the data or parameters that this indicator takes into account. I will click on the OK button. Now we see a similar situation, but unlike the previous indicator, now we have two, red dashed line and blue line. There is also a difference between the important indicator levels. This time it's level 20 and level 80. I will not spend much time on this indicator as the rules are exactly the same. As for the ERISA indicator, the first zone is oversold. It's the zone between 0 and 20. It gives us buy signals The zone between 80 and 100 is an overbought zone and gives us sell signals. There is also another rule related to this indicator, which is we have a buy signal when this blue line cuts red line from the down to up. We have a sell signal first when the indicator found in this overbought zone, and then when this blue line cuts the red line from up to down, as you can see, very similar rules. As in the previous example, everything is almost the same. As with the RSI indicator, one of the oscillators is the MACD, and I'm going to add it to the chart. Okay, here it is. I'll hit OK button. This time, we see a different picture. The MACD belongs to the oscillators because it has this red line that oscillates around the value 0. This indicator is a combination of momentum I volume indicator and moving averages. This red line represents the moving average. To be more precise, this line represents a combination of several moving averages. I'm not sure if you can see numbers 12, 26 and 9. These numbers indicate the moving average. Different moving averages are used, but just one is obtained, and it is average of all those averages when this line grows. And when it's located below these bars, the indicator tells us that we can believe in a strong uptrend. When this line starts to fall, and when the bars are below this line, the indicator tells us that there is a possible reversal and that the price may fall. I do not use this indicator in trading. I use just the RSI indicator, but only as an indicator tool with my trading strategy. The most important signals provided by these indicators are divergences. Divergences are definitely the most strongest signals provided by oscillators, and we are going to talk about them in one of the following. Just on this currency pair, we had a divergence. A great example, we had a sell signal here, but we will talk about it in another lesson. I'll see you